right, guys, so starting our morning here in San Antonio, we're here for the groundbreaking of Apollo Oaks. And while we were in town, we made Paul made a few appointments with a few brokers to go and see some multifamily properties, because that's the main part of our business, right, is multifamily. But we do BTR as well. We love that asset class. So we're going to meet with a couple of brokers from Colliers, and we're going to be walking a property called The Row, I believe.
Yep.
You and your team, Paul, have looked at The Row in pretty detail, right?
Correct, yeah.
Tell us a little bit about it.
So The Row is actually a property that was recently foreclosed on. The owner of the property, he has several apartment communities across San Antonio and the state of Texas. And unfortunately, he bought at the wrong time of the market using the wrong type of debt and leverage.
Yes.
And is currently underwater. Got foreclosed on the property, multiple properties. So both properties that we're actually looking at today are owned by were owned by the same owner, foreclosed on around the same time. But the row that we're going to go look at first, it's a 100-unit multifamily property that's right next to the University of Texas at San Antonio.
Nice.
So a great location, desirable location. It's within just a few miles of La Cantera, which is a big shopping area. Several other employers and medical hub that is also in the location. So it should be a good property. Ava's first time in San Antonio, so figured we actually do property tours, get an experience of what these properties look like in comparison to the other markets that we're in the little nuances and differences that San Antonio properties may have compared to like Tampa. But also giving the brokers an opportunity to know who we are, because that is also important for credibility. If we can, break bread with these brokers, they know us as people, with the motivation and the drive to get things done. They'll work with us to get these deals to us. So
Absolutely. And today we're meeting with 3 different brokers from 3 different brokerages.
Yep.
And then tomorrow, the groundbreaking, we're inviting all of them over to come there. So wining and dining them, spending time with them, just like as Paul mentioned. That's important. That relationship is key in finding the right deals, right?
And let's put something into perspective as well. When it comes to finding deals, it's very difficult to find deals in this space without overpaying and everything else like that. We know that the right relationships, I always tell investors this, that they can really understand the commercial real estate world and the space that we live in, is when it comes to getting a deal done, sometimes it's not always the highest offer that wins the deal.
Right.
Sometimes there's deals that, people put $1 million, they're $1 million above everybody else, but the broker will go with the person that they actually respect, know that they can close, and know that they are who they say that they are.
yes.
Because that's a big thing in this space. People that are, unsophisticated, possibly other syndicators that are unsophisticated, they put down offers and they tie up the seller. So one of the things in our reputation is the CPI Capital reputation is we say we're going to do what we say we're going to do. So that's a big part too, that investors, I think, respect and that brokers respect.
Absolutely. Another key important part is when Paul shares his analysis and underwriting and the research he's done, that amount of information that goes to the broker, they're always very impressed. They're like, wow, you guys have spent a lot of time on this deal. And that's what they were saying on a deal we were involved with, where the first offer was $2 million more than ours, or some crazy number above ours. They still said that, hey, we're going to let the seller know that you guys have spent a lot of time here. We don't feel that confident about, after seeing your research, we don't feel that confident about this other offer that's $2 million above yours because of the research you've done. So yeah.
We're really big on the marketing part of things as well, and creating content and creating videos, because we have a lot of investors, like this whole syndication with LP investors. Not everybody can make it out to the deal. Everybody's investing a significant amount of money into the deals.
Hold on to this.
Oh, thank you. Everybody's investing a significant amount of their hard-earned money into the deals, and we want to give them an experience when it comes to coming along with us for the drive, meeting the brokers.
For the groundbreaking, you're talking about for tomorrow, right?
And for the groundbreaking ceremony. Well, also to see kind of the work that's put in behind the scenes that CPI Capital does by meeting the brokers and whatnot, walking properties, and then also the groundbreaking ceremony. Like, there's so many investors who we're creating content so that it's a beautiful experience for them, so that they can kind of feel like they were there with us as well. So it's not only an investment that you're making, it's an experience as well. And I think that's why people really get excited to partner with the team and really go through this journey of being a passive investor.
Absolutely. Five years ago, multifamily was the second best performing asset class under the commercial real estate umbrella. Right. So it had beaten the S&P 500 in the 20 years prior to around 2020 when we started. So we wanted to get Canadian investors to have exposure to multifamily through the syndication model. Now, they could have done that through the public REITs and what have you, but there wasn't a lot of firms offering syndicated deals for them to do so. So that was kind of the idea. We started a firm.
And particularly for U.S. real estate.
For U.S. real estate.
This business model does not work in Canada.
Value-add business model doesn't work. There's just no yield.
Exactly.
Yeah.
There's no yield.
Okay. Yeah.
Exactly.
So that was the idea. We started CPI, and initially was just to partner with Canadian investors, but we started having U.S. investors reach out to us as well, LPs. So we've really built a great infrastructure internally when it comes to the equity side of the business. So we always have more money than deals.
Canadians are very bullish about investing in U.S. real estate.
It's very sexy, right?
Yeah.
U.S. real estate is a good selling point. So initially, we didn't have the internal infrastructure for acquisitions and asset management. We partnered with a couple other groups, and we did a few deals in the Carolinas, in Houston, and in Orlando. But then when Paul joined us a few years back, we started building the acquisition department as well. But we were pretty focused on Florida, particularly Tampa Bay. That was our market.
When we re-entered the market in July 2024, we got about a 30% discount on Atlas at Bay Point property we closed on in St. Petersburg. We closed on that deal in 2 months. We had raised $10.5 million of equity. We oversubscribed.
It's 55% LTV, so it wasn't high octane, agency loan, a lot of equity we had raised.
And then the sellers had to do a quick close, so we closed in 2 months, which is quick. We know in commercial real estate, that's good.
On top of 13% rental compression, but we also had hit the inflection point because there was 13,000 units that all came online at one time. It's going to make a disaster for anybody in this market. That's the highest ever deliveries. But on the counter side of this is you've seen that the absorption happened much faster. And now we're finally at the equilibrium of usually if 2% of inventory is being built, that's usually the equilibrium. We're at 1.5% of inventory being built with nothing behind it. So typically that's going to find a big pop in resilience, but because it's taken so many people and big names down, that this is the opportunity. Like if you don't have problems in your portfolio that you have agency issues or you're working on a floater, you're basically on the bench to play the cycle. So you're in a really interesting position to not be on the bench, this part of the cycle to enter and grow the portfolio.
So, Paul, question for you. At 9, you were getting 15%?
Yes.
It's 15%, it's your cash flowing day one, right? Or no,
Yeah.
because you're at 80%,
Well,
you might not be cash flowing year one.
Yeah, I don't remember the exact cash flow figures, but it was probably about 4 in year one, just because of the occupancy issue. This property is right now at 80%.
82, she said.
Okay, 82 now.
No, it's gonna be 82 any minute.
Okay. They're trying to achieve 90%. So that would help with the lending.
How many acres is this? 8.3, okay. Yeah, I mean, it is. San Antonio is a lot of white and black. It is very subtle. I mean, the Floridas, you have gray roofs, so you can go more cool colors. White and black are in that cool. They're not warm colors, so you could bring in some grays. But currently, updating the colors maybe, pressure washing, fixing, continuing in that fascia. But keep in mind, all the money you spend on the exterior, you're not going to get any rent bumps from that. So,
if it's inexpensive enough, I mean, like landscaping, painting grass on that patches over there.
Yeah.
It's not going to cost too much.
Yeah, it's going to help you with your occupancy. It's not going to rent your NOI.
Hydro seeding is cheap.
Yeah. Maybe I'll do it myself.
Yeah, exactly. Just, yeah.
So have you guys, when is the call for offers on this one? December 4th. December 4th. What's the revenue from this? Like, do you have any?
It hasn't been a lot. From what I remember, even looking at the numbers, maybe $2 to $5 per unit per month, maybe. Total of 35 lots, and it works out to be 75 units. So there's like 30-ish duplexes and 5 triplexes.
Interesting.
Yeah.
They look identical to these. Granite.
And what's this one currently renting for?
This is $9.99.
$9.99.
Square footage was what again?
This is $636.
636.
$636.
What's the biggest things that are currently breaking down? Is it ACs? Is it something not working? What is
We've
what's the
been
biggest?
good with the ACs.
What's the biggest
I've noticed
We
a
have
lot of
water.
the dishwashers.
dishwashers?
That are like the last thing to be renovated in a lot of the units,
Mhm.
but everything's been either repaired or replaced. So,
Yeah.
from what I've seen in the last few
Okay.
weeks.
Prior to that, we don't have any, with the takeover, typically your software doesn't pull up the previous company. So we don't have anything to go on other than what the residents tell us.
How you doing, my friend?
Doing all right? Yeah, nice to see you. Hey, how you doing, buddy?
Good. How are you doing?
How are you?
Good. It's David.
Good, man. How you been?
Oh, good.
Hey, brother. How you doing? Congratulations
Hey,
on this,
thanks,
man.
man.
Yeah. really appreciate you. Without you guys being here, this project was definitely not possible. And of course, with the Invest 5S team, if it wasn't for our union and partnership, this project wouldn't have been possible. We really appreciate all their work and their attention to detail and their entrepreneurial spirit for them to partner with a group out of Canada and try to build more projects, create more jobs here in the U.S. and keep building the city of San Antonio. So really appreciate that. Ava and I, of course, many of you some of our investors are here, our partners are here, so they know how close our relationship is, that we manage and run the business together. We've named this project after our second-born son, Apollo, sitting right there. So, he's here. So that shows how much how serious we take our projects, right? It's not about doing deals and making money. It's about building legacy. It's about building projects, creating jobs, and making returns for our investors and building something great all jointly together. Furthermore, this weekend, we also had our investors coming in, and they spent some time with us in a quote-unquote mansion that we got, and we spent some time with us bonding together. So again, we don't treat our investors as numbers either. We're very close with them and so on. But yeah, I'll pass it on to...
You said everything I was going to say.
I stole all
literally everything. I love you. Yeah, we just wanted to, the real estate, it's a people's business, and none of this would be possible without the people standing in front of us today. So we thank you all so much for, flying in, spending time with us. We always say we want to create an experience for our investors as well. So you guys are part of the family with us, and also our development partners. I wanted to thank you guys for two things. One, for this beautiful partnership that we've created together, and the other thing that I'm really thankful for is helping my husband's lifelong dream of becoming a cowboy. You guys helped make that happen. So in return, I became a cowgirl, and we just got to buy a ranch now, honey.
That's right,
and
exactly.
And put a couple horses and get some guns and everything else like that. So.
I think Clay said we need at least 8 cows to get the tax exemption.
Is that what we do? Okay,
so
okay.
8 cows.
That's our next thing that we're going to be doing. Today really marks a huge milestone for us, you guys. We have multifamily in our portfolio at CPI Capital, but when August and I co-founded the company 5 years ago now, we were always very bullish and really believed in build to rent. It was an asset class that we were very excited about. Back in 2022, we went to Tucson, Arizona, and we were going to close on a $20 million acquisition there. We ended up walking away because interest rates increased at such a rapid pace so quickly. We walked away. We lost a lot of money from opportunity cost.
Our own money, not investors.
Our own money. It actually helped us build a lot of trust with investors because we walked away. And that was really hard on us. Our lawyers told us, some of the best deals that you can do are the deals that you walk away from. And that really was, kind of something that we went through. So today is really, we're turning our dreams into reality, so we're very excited about that. And then we also want to celebrate our son Apollo. Atlas owns some property in Florida, multifamily, so he gets the state of Florida, but Apollo gets the state of Texas, and this is going to be his first property that he's adding to his portfolio. So congratulations, Apollo, as well. And thank you all so much for being here.
Yeah, absolutely. One quick thing about the names of our kids. It's not about pride and what have you, chauvinistic. It's more about keeping us focused, right? If we have a name of our kid on this project and on this property, it makes us be extra diligent and extra careful. Just wanted to highlight that. But
yeah, it's their legacy, right? Yeah. So we're really excited about everything. So
Yep.
Thank you, and let's celebrate.
Absolutely. Passing the mic to Paul Hopkins, our VP of Investments. He's honestly really pivotal. Without Paul, I honestly believe this project wouldn't have been possible. The Invest 5S team can also attest to that because he does him and his team do all our analysis. So Kyle is nodding his head as he knows how much time goes into it. He's seen the videos that Paul puts together. It was his underwriting and so on.
And not only that, but Paul's video that he puts together for investors is like an hour long. It helps build a lot of trust, right? We open the doors and we show investors how we're forecasting the numbers that we're forecasting.
Totally transparent. Give as much information as possible without forcefully making it convoluted. We've seen some firms do that.
He's a mad scientist. I tell him on the geek in the sheets.
The geek in the sheets. Yeah.
This is a funny story. So we were joking around about how good he is on the Excel and the spreadsheets, and so he basically said, "I'm a geek in the sheets." It was a real funny thing.
Well, yeah, please.
Yeah. Well, as you know, I'm a man of many words. So but thank you all for coming. I'm very grateful to be here, to be partnered with such wonderful people on both sides. So thank you all for being here. This is pretty exciting. I've been in construction since I was about 12 years old, and this is, funny enough, the first groundbreaking ceremony that I've been a part of as well. So it's definitely special to me, but glad that I could share it with everybody here.
Yeah, no, thank you. Thank you.
Bob.
Appreciate it.
Yeah.
So I want to thank all my team that's here. I know the investors, thank y'all for coming. I know y'all came from all over the United States, some from Canada, even a guy from Serbia. Where's George, right? So we appreciate all y'all for being here, and my team's here, all my Invest 5S team, our property management company, even our maintenance company, so all our people that work with us and really help us be successful, they're here, and our title company, Sophia, Chad is our lender who does all of our loans for our investors, Tommy's here who does our insurance for our investors, so really our whole team is here that works with us. Eli from Home Depot, we buy a lot from Home Depot, he's here as well. So we appreciate everyone who came out, guys who brought all the cars. We appreciate y'all for coming.
Absolutely. Thank you, guys.
So thank y'all, and there's thanks for everyone for attending. We really appreciate it. And without y'all's support, without y'all's hard work, we wouldn't be successful. So thank y'all from the bottom of our heart. So
You gotta give her some respect. Right?
My son, August Vinyas, and my beautiful daughter-in-law is Eva. She worked very hard, and I'm so proud of you guys.
Thank you. Thank you.
Everybody.
Thank you.
Love you.
Love you.
Love you, Mom.
Love you.